All right, what is up, traders? What's up, tycoons? Super excited for today's video, coming at you guys with another natural gas video. What we're going to do is actually dive into some of the news surrounding natural gas, okay? And then we're actually going to dive into the charts themselves. We're going to take a look at the natural gas futures, the natural gas spot price, as well as UNG and Boyle. So make sure to smash the like button, subscribe to the channel if you guys are looking for a place to get constant updates on natural gas. I'm putting out natural gas videos every single week, right around 2 to maybe 3 videos a week. So this was going to be a good channel for you guys to find, constant news and constant updates. All right. Now, we're going to start off here, but before we go any further, all right, we have to go over the disclaimer. The content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear in this channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. We're going to go ahead and move forward now, and we're going to start off here by going over the natural gas futures. Now, they retreat on profit taking over rising storage surpluses. And what we have here is the NGI storage snapshot. And so if you take a look real quick, all right, what we have is the estimate, all right? So this is the estimate. They're estimating it's going to be going up, right? So storage is going to go up. We have the 5-year max here in red. We have the 5-year minimum, and you see, this is typically a time, all right, when things are going to start curling back up. Okay, now we have the actual weekly storage volumes here. So, things are falling in line, but, they are expected to start rising when it comes to the storage. Okay, you can go over the, range of expectations, the weekly change, 5-year average, weekly change, different things like that. But at a glance, okay, the near-term outlook is still bearish. Now, my shares are actually green now. Okay, I actually took profit on some of my hedges, my short positions, about a week or two ago when Boyle went under $3. I have the $3 puts. I sold about half of those for around 40% profit. And, now I still have some of that hedge. But now the hedge is down and my shares, which is a larger position, are actually back green. So I'll be looking at the charts to see if I need to add back to my hedge and maybe get back in there a little bit more to protect myself. But the near-term outlook is still bearish. That's what these articles are saying. Soft output seen is needing to hold, and the West Coast cash rises on pipe work. Now, cash prices declined across the majority of U.S. locations, but gains out west lifted NGI's spot gas national average up 2.5 cents to 2.210. Washington's biggest clean energy lobbying group pushes natural gas friendly policy, right? And that's actually really, really big. On two of the most consequential decisions facing Congress and the Biden administration on energy and climate change, the nation's newest and largest clean power industry group has decisively aligned itself with companies that want to preserve markets for natural gas. This is big news. We also have the natural gas injection season beginning. The annual withdrawal season runs from late fall through early spring as heating demands peak during winter. While the price tends to reach highs in winter, 2022 and 2023 was not an ordinary season as the price made lower highs and lower lows. The injection season, when natural gas flows into storage across the U.S., began over the past weeks with stockpiles at a high level. Nearby May, NYMEX natural gas futures were around 230 per MMBTU level on April 17th, 1/4 the price at the August 2022 high. My Q1 energy recap on bar chart highlighted the 50.48% decline in natural gas in Q1. The withdrawal season ends with stocks at a high level. Right. And so now we're seeing the injection season beginning. Okay. We also have a sudden rally in UK and Dutch prices, and this could cause US natural gas futures prices to recover. While winter is the peak demand season, natural gas is a critical energy commodity that generates electricity. A hot summer would increase the demand and push prices higher over the coming months. And that's something interesting that they're talking about here, because what we've been seeing is this warm winter narrative, right? And winter is over. And if we're going to keep seeing, this warm winter narrative kind of spill over, it could lead into a hot summer narrative. Now, that's just a potential. Natural gas tends to reach lows in the early injection season, but the market could surprise. And so we'll take a look at the charts, and we are showing some signs of potentially trying to find a bottom and potentially finding a bottom. But the market could still surprise us, and things could definitely still head lower. Anyone who trades natural gas knows that the price action can be hair-raising. While the U.S. natural gas futures market moved into a bearish pattern of lower highs and lower lows from the 05 record high to the June 2020 low, the price action in 2022 broke the long-term bearish trend with wild price volatility. Seasonality favors a continuation of the bearish price action, but U.S. natural gas futures probed above the $10 level in August 2022 and rose steadily from January 2022 through late August. Meanwhile, natural gas is inexpensive, which does not mean it will not get cheaper. Okay. A lot of people are saying, and I see comments saying, hey, well, natural gas is just so cheap. How are these companies, how are these businesses going to stay afloat? Right. Now, while I kind of agree with that, they also made a lot of money, all right, in the last year, right? When we saw that huge spike in natural gas prices, a lot of these companies are sitting on profits, right? And so even though prices are extremely cheap right now, there was that period where prices were really high and they were able to capitalize off of that. If the nearby futures can hold above the $2 level, a rally to $3 or higher is possible. However, the 144 low and critical technical support levels remain the target. The bearish trend that took the energy commodity over 80% lower over the past 8 months continues as the market is in the early days of the 2023 injection season. Be careful in natural gas, as seasonality does not always dictate the path of least resistance of prices. The federal appeals court strikes down a Democratic city's natural gas ban backed by the Biden administration. And so that's just some more news, that I wanted to go over. We're seeing that, the crackdown on natural gas isn't really happening as much anymore. And people are realizing that, natural gas is it's not the cleanest thing, but it's a lot cleaner than some of these other energy resources. And a lot of this clean energy, guys, I hate to say it, sometimes is a waste of money. Okay. Like we see windmill facilities, windmill farms. Okay. So basically they're farming wind for electricity. And what happens? The wind gets, the windmills get rusty. Okay. And, after a few years, they kind of just go and build a new one. Now they can't bury those windmills because it's not good for the environment. So now they just spend all of this money on these wind farms and these giant windmills, and then, they no longer become functional. And what do? It's just like a massive gravesite of windmills, essentially. And so now that people have been doing this for a little bit longer and they're getting some more experience, and the fact that they can't take these things down and bury them, because that's bad for the environment. And so that would, go against their, pro environment and, green narrative. We're seeing a lot of people, kind of, not necessarily crack down on natural gas as hard and really, tighten the whip on it, right? And loosen up a little bit more. All right. So what we're going to do now is head into the futures monthly chart. And so I've been going over this demand zone right here. This has been a very strong demand zone, guys. Okay. Now it's a little bit hard to see because these are wicks, but we've wicked it 1, 2, and 3 times, right? And so being that this is a monthly chart, this just means that within a month, we came down to these demand zones and then we quickly shot back up. And that's what we've seen time and time again. This is a strong demand zone from 2020. All right, where we tested it there. We also tested it several times in 2018 and saw a strong price reaction. And we also tested it here in 2016 and saw some strong price reaction as well. Okay. So, that's what we're looking at. This is our current monthly candle. And as you can see, it is green. Now it is a doji currently at the moment, but April is not over. So I did a whole video on April seasonality. And if you look historically, natural gas is green 69% of the time in the month of April. Now, I went into really good detail on that. You can go ahead and look up that video if you guys want to. But essentially, one of the main points that I want to make is that there were months where natural gas was up 15%, 14% in the month of April, but not just because it's green 69% of the time does not mean that it's always going to be, a huge rally in the month of April, right? There were plenty of times where it was only up 0.5% or 1/4%. So, currently, we are green on the month of April. We'll see if that can continue, if we can push back up higher. But we need to zoom into some of the smaller time frames, right? We start off on the larger time frames to get the big picture, and then we zoom in to get more of the day-to-day, week-to-week price action. Now, these are our supply and demand zones from that monthly chart. This is the 4-hour chart here on the futures. All right, and this is a great example. You can see, all right, that boom, as soon as we even come close to this demand zone, guys, we're seeing big price action to the upside. Over here, big push to the upside. Over here, big push to the upside. So I'm liking the price action that I'm seeing at our demand zone. All right, but we haven't really gotten any type of a reversal. Now, these three lines right here are the fibs. I specifically use the three most common and well-respected, which are the 61.8, 50%, and 38.2. And so you see we had this very strong push to the downside. We retraced up to the 38.2, ultimately rejecting it and heading back down lower. We do have this gap to fill right here, this blue box, okay? So if you take a look at the other gaps on the chart over here, we had this rising wedge pattern. We are in our supply zone, and I warned a lot of people, hey, we could come back down and fill this gap on natural gas, on the natural gas futures chart. And this is when oil was heading up towards that $7, close to $8 price range. And, a lot of people actually got trapped in that price range and, are down like 50% or more. Okay. But yeah, so we see, we had a rising wedge, we had a bearish pattern, we had a very textbook break the trend line, retest the trend line, push lower. We filled that gap. Then we gapped up again here recently, and we came back down, filled that gap, consolidated in that area. And we do have a small gap to fill from the 17th. And we could end up filling that gap. We got pretty close to filling that gap, but ultimately we didn't really fill it. So that's just something to keep on your mind, to keep on your radar. We had the gap is right around 175 on the futures chart. Okay, so that's what I'm looking at. Now, if we continue to rally, okay, our major resistance levels are going to be 203 and 213.8. The way you use the fibs is to identify trend continuation versus reversals, right? So we have the downtrend, we have retracement, and we're going to see, is this a continuation of the trend? Or you can also use these to spot reversals. So if we break through these three retracement levels, right, we move down, retrace, consolidate a little bit, and ultimately break through, we could potentially spot an upside reversal where we could try to retest our previous highs, if not create a high and then a higher high. So, that's how you use the fibs basically in a nutshell. All right, and that's why these levels are going to be very important to pay attention to. Okay, now let's move forward and take a look at the spot price of natural gas. So on top of the fibs and supply and demand zones, some of the other strategies that I like to use and implement is going to be divergence along the RSI. Now that is your relative strength index. So it's going to measure the relative strength of whatever it is that you're looking at versus the price action of what you're looking at. So many times there's been divergences where price action is going higher, creating higher highs. But meanwhile, the RSI is making a high, lower high, lower high, lower high. So we're actually losing relative strength, making lower highs on the RSI, while price action is going up, making higher highs. That's a term known as bearish divergence, and you can see we had a sharp drop to the downside. Now, the opposite of that is going to be bullish divergence, where here we have a low and then a higher low on the relative strength index. So we're increasing in relative strength where we have a low and then a lower low on the actual price action. So the opposite of the bearish divergence is going to be bullish divergence, and you can see we had a strong move to the upside as well. Now, no one strategy is really going to be 100% and work 100% of the time, but when you can start to combine a couple strategies together, that'll give you a little bit more confidence in your play and could potentially help give you the edge that you're looking for. So what I like to do is combine it with the MACD. So if I see a divergence, I want to look for a correlating MACD signal. So in this case, where we have the bullish divergence, we also get the red line here crossing above the yellow line. That's typically known as an entry signal on the MACD. And you can see we got that strong move up. Over here, where we have a bearish divergence, we're creating higher highs, but we're creating lower highs on the RSI. We also get the red line crossed below the yellow line shortly after the divergence, right? So here's the divergence. We see a peak in the MACD, and then we actually get the confirmation of a downwards move, and we see a strong push to the downside as well. So using that information and that strategy, we can see that we've actually been building this bullish divergence and testing this bullish divergence trend line for a very long time. Take a look how we have this low and this lower low, right? So we've clearly been in a downtrend, but if we look, we have a low, we have a higher low, higher low, higher low, higher low, higher low. So the natural gas spot price has really bounced off of this bullish divergence trend line about 5 or 6 times. Now, the more times you test the trend line, the weaker it gets. So we need to be very cautious of a strong pullback because there is a strong chance that we break through that. And if we do that, most likely we're going to break below this $1.87 level. So these are the Henry Hub natural gas spot prices. The major levels that I'm watching are 187, 220, which if you look, we've been battling 220 for a little while here. It's been a pretty strong resistance level. Above 220, I have 243. Above there, I have 279. And above there, I have 332. Those are the major levels that I'm watching currently on the natural gas spot price, along with the indicators. Now, this is UNG's daily structure. So I do have UNG shares. All right, that I don't have loyal shares. I have UNG shares. And if you take a look, markets tend to move in 3-wave and 5-wave structures. And so here, what we got was a large ABC move to the downside, right? So we had our initial wave 1 down, then 2, and then 3. And so 752 is really where I wanted to start accumulating shares. Now we did dip below there. We'll actually zoom in and take a look at the price action. But for me, I wasn't really too interested in accumulating up here at these prices because it seemed very likely that we were going to get the C wave extension down to about 752. Okay, you can take a look at the MACD, take a look at the RSI as well here, and you can see that we're having some of the same signals that we see on the natural gas spot price. And so here's some really good examples of the fibs and, getting that fib rejection and getting that trend continuation. If you see here, we move down, we retrace up to the 61.8, and then we continue that trend, right? So we see a 1, 2, 3, right down. And then what do? We move down, we retrace up to the 50% level this time, and then we continue that trend. And each time we continue the trend, we're making a low and a lower low. Then we retrace up to the 61.8% level, and then we continue that trend. And we've had just really, really, really strong move to the downside. Here we are zoomed in on that chart. This green line is at 752, 753 level. I also gave some important levels below there just in case we continue heading lower at 667 and 642. And those have been pretty well respected. We did try to hold 667 as support and resistance a few times, but we broke down below there, and 642 ended up being a pretty strong support level. Now, we also had this algorithmic selling channel right here. Okay, that's what you see when you see this, these selling channels. These are controlled selling. All right, and these are very algorithmic in nature. Whether you believe it or not, about 70% of all trading in the stock market and like cryptocurrency market, okay, is done by algorithms, right? And so they're, these large institutions and hedge funds, they're programming algorithms to buy and sell on certain market conditions. And you can spot some of these, algorithmic channels. And that's what we saw here, right? And what we did was we had got a very textbook breakout retest of the channel, right? Which was also right along that 642 support level. And then we pushed up higher and we actually gapped up here and created a gap down to fill after that strong move up. Now, if you take a look, we've already filled the gap, right? So that gap has already been filled. That's why it's not drawn on the chart. Okay, if we take our most recent high and connect it to our most recent low, these are going to be the Fibonacci levels that I'm paying attention to, right? Our 38.2% retracement level is going to be 771. Our 50% is going to be 815. And our 61.8% level is going to be 859. Now, 822 is just a strong support level that I've had for a while before these fibs. If you take a look, we were holding right around this level very, very, for about a week. We consolidated here ultimately before breaking below and getting a strong push up. To me, that looked like a liquidity grab, right? So we see price action consolidating here, and they don't have the liquidity they need to push it up as they wanted to. So they trigger a bunch of stop losses, and then we see the strong move to the upside afterwards. Now on the MACD, we had a couple questions last time we were looking. We had question marks right here. We wanted to see if this thing was going to curl up above, and that's what we got, right? And so since the curl happened over here, we have moved higher in the price of UNG. But keep in mind some of the news and some of the sentiment and, seasonality, the injection season and different things like that. Okay, it is possible that the bottom is not in. We're showing signs of trying to find a bottom. Okay, and we could potentially call this a double bottom here on the chart for UNG, right? We could say that this was a nice little double bottom and we saw a strong bounce. We'll see if we end up coming back down around the 642 level. If we hold it, that could potentially be a triple bottom, but the more times you test the level, the weaker it gets. So below 642, we have 606 is going to be my next major support level. And if we break through there, I'll go ahead and update the chart with some new levels. Now we're going to take a look at Boyle here. All right. And so Boyle actually broke out of its expanding wedge, which is more bearish, right? And this expanding wedge right here was actually going to take us down to about the $2.13 price level. But rather, we got a nice little breakout. Okay, very similar to UNG, it had a gap to fill. We came back down and filled that gap. The major overhead levels for me, all right, is 435 and 516. If we are able to break out above those, all right, the 50% retracement level on the fibs is going to be 549, and the 61.8% level is going to be $6.08. So those are some of the main things I'm watching. If you take a look, we do have this gap up to fill. Okay, in this red box right here that I'll make for you guys, that's going to take Boyle close to that $7 price range. If you take a look, that's right where it would be if we get that gap to fill. So, that's roughly 100% move if we do get this gap to fill, potentially this summer or maybe later this winter. But you have to keep in mind a lot of the risk associated with Boyle. Now, I have a completely dedicated video to the decay factor, and, a lot of the myths too, because there's myths around the decay factor. But I've got a completely dedicated video to that. If you just type in Boyle decay or ZachlyTrades Boyle decay, it should pop right up. And it's a really, really good video. I put a lot of time into making to really explain things to you guys a lot. Now, not only do we have the breakout of this expanding wedge to the bottom, we also have bullish divergence here as well, right? We have the low, lower low, lower low, lower low, and then we're seeing low, higher lows on the relative strength index. So been building that relative strength. All right. We also see that we had some question marks here. We're looking to see, is Boyle going to give us a sell signal and curl to the downside, as the red line and the yellow line were pretty much trading right next to each other, and we see it actually curled up. Now, it hasn't been a strong signal. We want to see it create some space. We want to see this red line create some space between the yellow line and really show us we have some positive momentum coming. But for right now, at least it's trending in the right direction and heading back upwards versus going back down. So that's pretty much it for today's video. If you guys want to do a one-on-one session, I do one-on-one coaching sessions via Zoom. All right. You can email me at ZachlyTrades@gmail.com. Most of the coaching sessions that I've been doing over the past month have actually been related strictly to natural gas and UNG and Boyle. If you guys want to do that, feel free to email me at ZachlyTrades@gmail.com, and we can try to set up a good time or session. Appreciate you guys watching. All right. Make sure to smash that like button and subscribe to the channel. Share it with some of your friends. All right. So that way they can find some, just actually good charts and good data. All right. I try to be unbiased as much as I can and really just go over, what the top news is that I'm looking at over the past week, as well as, what's developing in the price action and what I'm seeing along there.